Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report from here at the Reserve Bank in Wellington, where the Reserve Bank has just cut the official cash rate by 100 basis points to 6.5%. This is unprecedented, by far the biggest cut in the official cash rate ever, and at a time when we've just had inflation numbers showing inflation running at 5.1%. Why is the Reserve Bank doing this? Well, obviously we've just had the financial meltdown of all time on international markets, and we're seeing a very slow local economy. Reserve Bank Governor Alan Bollard told us today that the economy is going to slow much faster than he expected back in September when he released his last set of forecasts. He expects a recession to be extended. He doesn't say for how long, but he expects it to be extended and deeper than he previously expected. He also sees inflation coming back within the Reserve Bank's target of 1 to 3% by the middle of 2009. Now, previously he was saying this wouldn't be until the middle of 2010. So this is a significant slowdown in inflationary pressures. But the Reserve Bank Governor also said he is worried about stubbornly high domestic inflationary pressures, and he particularly pointed to high power prices, high local rates, and also rising wages. And he said that he expects to cut the official cash rate again, but he wants to see some solid evidence of slowing domestic inflation pressures before he does that. So what's the reaction to this announcement? Well, immediately after the 100 basis point cut, the New Zealand dollar actually rallied. Now, this is something you wouldn't expect when you've just seen a huge cut in the official cash rate. But of course, some people in the market had expected this. Some had even thought he might go more than 100 basis points, and that's why the New Zealand dollar rallied from 58 US cents just before the announcement to 59 US cents after the announcement. We've also seen late this morning an announcement from Kiwibank about its interest rates after the Reserve Bank cut the official cash rate, which is the base for all interest rates in New Zealand. Kiwibank has cut its variable mortgage rate by a full 100 basis points. But, and this is the key one, it has only cut its 2-year fixed rate mortgage, which is the one most people go for, by only 20 basis points to 7.79%. Since the peak of interest rates earlier this year, Kiwibank has cut its interest rates by 105 basis points, whereas the Reserve Bank has cut by 150. So the early signs are that the banks are not going to pass on all of this 100 basis points into lower mortgage rates, although you can be pretty sure it's going to be passed on in the form of lower term deposit rates. I'm Bernard Hickey with a special report from here at the Reserve Bank in Wellington, where the Reserve Bank has just cut the official cash rate by 100 basis points as expected to 6.5%. I'm Bernard Hickey for interest.co.nz.